Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It has been a very interesting 24 hours when we look at the US dollar index, because previously that we can see here on Wednesday is that we had a bearish outside range day and gave some risk to the downside, but that has been reversed. Firstly, from the midway point after the second rejection that we can see here, and also the dragonfly doji that's in place from last night's close in New York, and therefore could see further risks to the upside and look towards its objective that I'm still holding at 93 figure to 93.60. Now, in the broader sense, when it comes to the monthly outlook, I still believe that the cycle is shaping up very much to a bull case, maybe exceeding up towards 96. Now, that's a broader picture, which will take weeks to probably get there. But in this shorter term, we can see here that the rejection from the sell-off on Thursday, and also from the knee-jerk reaction that we've got from the euro after the rejection of 118.25, and the euro is weighted to the US dollar at 57.6, now puts the focus back on the downside at 117.50, with the resistance still holding at 118.25. Reassess from there, because a close underneath 117.50 would give further scope down towards 116.80. Now, the market's got pretty much whippy after the release of the jobless claims, after that the US Labor Department reported that the unemployment claims had risen last week to 419,000, which is the most seen in 2 months, and missing the forecast of 350,000 with a previous release last week of 368. Now, what I can see from that is that further knee-jerk reaction will come if the dollar does strengthen. But all in all, the Australian dollar may actually hold its bullishness if we can break the top side. But one thing to note is that the bullish outside range day was not confirmed, as we didn't get a close above the level of 73.7080. Still, from the technical pattern, the longer we stay beneath the midway point does give risk that we see a return to 73.40, and a close under there would reinstate the downside towards 72.85 to 72.10 and completely disregard the topside target around 74.30 to 74.80. But overall, let's see how this market plays out, because the bullish candle was still holding and hasn't been negated as of yet. Now, a close under 73.30 would negate this candle and therefore cancel the topside target at 74.80 and look for a bearish case. Dollar yen, well, the market still seems to be a little bit on the firmer side, but I would be a little bit cautious in case we see a bull trap placed around that 110.7080. Technicals are holding for a potential up challenge from the RSI point, that is, but not from the MACD. But still, nevertheless, I anticipate one more test up, and most probably find that the disappointment for the bulls if we see a very strong rejection, as we would look back towards 109. Pound also took the challenge to the upside, but did not clear the 137.7090 level, and from that, in a little bit hesitant. Keep an eye on these technicals. Although the MACD is still somewhat questioning if it could break into a bull run and to marry up with the RSI positive signal, we could see this all turn around if the dollar does rally and break back in towards that 93 area, and that would see the pound retreat back to about 136.90 or even back to the lows, which come in around 135.60, 65. But let's not get too bearish on any of these markets until we see the dollar index either break above that 93 handle. So keep an eye on that. Looking into sterling yen, well, the market seems to be a little bit apprehensive as it takes the challenge high, with the cap seen around 151.90 figure. I do anticipate that if the pound leg can remain strong, then we will see a push to the upside, but we do need to clear that resistance. Another rejection, as we can see from Thursday, that is at 151.90 figure, will turn the focus back towards 150.10 and reassess from there. An interesting two-way price action for gold. Now, since the retreat of 1,830 to 35 area, the market has been pretty much weighing on the support. and still from a technical point can continue that. Although we did get a low of 92 and did see a rebound, there's been a little lackluster price action into today, and I would say that the risk is still towards that level, seen at 1,786. A close beneath there would give further scope down towards 1,760. And I would say from a broader picture, it's looking very much like that. But we need confirmation, and that level of 86 has held very respectively. And let's see how we can play into today or tonight in the European session. And the resistance looks around 1,813.16. But as I say, all eyes are looking on that support at 1,786. It would seem that that heavy sell-off that we saw earlier in the week for oil, the market's been caught somewhat short with this spinning bottom, and the fact is that the market rallied and broken above the $71 handle, does give further scope up towards the resistance area of 74.40.80, which comes in around here, where the key reversal was pretty much posted. But do be on your guard, because I would like to see both these indicators, or even the three of them, to support a bullish case. So I'd say it's going to be a very slow climb, but while we remain above the support of around 70 to 70.40, then the upside holds. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start today and to the new weekend.